I'm Greg Hunter. Welcome to USA Watchdog. A little less than a month ago, I had a guest on and said the stock market had topped. It won't go straight down in a straight line, but he pretty much had stopped. And also, he'd been on the phone with me. It's a good friend of mine. He says, I think not only has the stock market peaked, but he thinks the debt market has peaked. I'm talking about Greg Mannarino of TradersChoice.net. Gregory Mannarino, thanks for joining us today on USA Watchdog. Tell me about how this debt has peaked.
Well, I think how we're actually seeing this in real time, Greg, is by watching again bond yields. What are they doing? They're spiking, they're moving back, they're spiking, they're moving back. This, to me, is a sign of a market top. We saw the same thing in stocks recently, and all of these markets kind of behave the same way. So what can we take away from this? Again, let's look at global events. Let's take in the fact that never in history have we been so overwhelmed and buried underneath a mountain of debt. And you can see clearly that I believe we are at a top with regard to the debt. And what does this mean? We could start to see a domino effect, Greg, where all of this just starts to cascade down and correct to fair market value. It will, whether it's, again, today, tomorrow, or next week. There's no way out of it, and that's what people need to keep in mind.
Well, the Greek, they're having this referendum, and I think they're done either way because the whole thing is done either way because now we find out that there's this report by the IMF that says, they need a debt cut, and then now Spain and Italy, along with, I'm sure everybody else is going to say, hey, we need a debt cut. We need a big debt cut at the central bank level. So isn't this way bigger than Greece already? I mean, isn't the real problem are all the other countries that want their debt cut? They borrow the money, they just can't pay it back.
Exactly, Greg. And that's what people, I think, are being distracted by from the mainstream media, saying, this is just a Greek problem, or this is just a problem with Puerto Rico. This is a global problem that we've discussed many times. It's insurmountable. It can never be paid back in any possible way. It's too huge. And again, it's the mechanism of the system. It just simply demands the relentless acquisition of debt in perpetuity. Once we admit we can't borrow anymore, we have a debt crisis. And that's what we're seeing here. And how are they trying to fix it, Greg? The same old way, by fueling it with more debt. And all this is doing is growing the Frankenstein, the monster of debt, even larger.
Well, don't you think that these countries just dig their heels in and say, listen, there's no way nobody can ever pay this back. Even the IMF in their little not so secret paper now admits to that it's unsustainable, they need actual cut. Then everybody needs a cut. Then don't we have some carnival of default and inflation? We have some people's bonds defaulting, and you have other people going, well, I'm going to sell all my debt before it defaults. I mean, don't we have some bizarro world setting up, setting up in front of us?
Absolutely, but what we're witnessing here is, again, just a correction to fair market value. Again, all of this has been inflated beyond the point of ridiculousness. Even the Bank of Internal Settlements came out, the central bank of central banks, chastising all of the world's central banks for what they've done. They've created, Greg, there's no way to put this, it's a malignant thing which cannot be fixed by any means. Anything. They can continue to try to inflate this bubble, Greg. It's not going to work. At one particular point, and I urge people to just do a little research about this, look at every single financial and economic bubble in history. They all have one thing in common, Greg. They all burst. Why? Because they rise above a level that can be sustained by any means. Any means. So these world central banks can step in here and bail out and stimulate and print and issue IOUs in the form of debt and bonds. It won't work. All of this, everything across the spectrum here, Greg, and I'm talking about debt. We're talking about currencies, also debt. We're talking about stock markets and real estate and precious metals. All of it is going to correct the fair market value. It has no choice. This is the single job of the markets to establish fair market value. So what we're seeing now is the market trying to assert itself, and it will win no matter what they try to do.
What do you make of the Bank of International Settlements, the BIS, the Central Bank of Central Bankers, coming out saying, oh, hey, next time we have a calamity, there's no way that we can do anything? I mean, basically, I'm paraphrasing, I didn't say exactly, but that's the idea that they say there's no saving it. They're out of ammunition. What do you suppose? Why did they put out that warning now? Seems like a pretty tough warning that, oh, next time this happens, we are all basically, out of luck.
Absolutely, Greg, because the world central banks have one weapon against all this, and one weapon only, and that is to issue more debt. Period. They can't contract the debt. They can't do it. Again, the mechanism demands in order to function that more debt be added, not just added, but in greater and greater and greater amounts. So in the event here of a debt crisis, what are they going to do? They're gonna what? They're going to have to print more and issue more debt. This is it. They have no alternative. And I've been saying this for a long time, so have you. What people need to understand, just at its most basic level, is this cycle of debt acquisition in perpetuity, because that's the only way the system functions, is ending. It is ending. And we are going to see a massive correction with regard to the bond yields, and debt is going to reprice itself to fair market value, and that is going to change the spectrum of every asset class, because everything is based off of the bond market. What I want people to understand is this is why world central banks have chosen to manipulate that portion of the market. Let me just say this while we're on the subject. There are a lot of people, especially on the mainstream financial channels, who will say, "Oh, the market is not manipulated." Are you kidding me? How could you say that when the largest part of the market is being manipulated, the debt market, by the central banks through every mechanism they can possibly do to keep the debt bubble suspended? Again, why, Greg? Because the alternative is too horrible to contemplate. Again, without the debt, without the ability to borrow cash in greater and greater amounts, we cannot sustain the now. That means we cannot sustain the world population that we have right now.
Well, what happens if these countries? I mean, Greece, obviously. I mean, he had the finance minister Varoufakis, or I think that's how you say his name, saying he'd rather cut his arm off without having a debt cut. Then we find out this not-so-secret report that says, "Oh yeah, we really do need to cut Greece's debt." That means they need to cut everybody's debt. What happens when the realization of there's no way they're ever paying this back, and they will have to have these huge haircuts? What happens to the bond market? Then does everybody say, "Oh, interest rates have to? Well, this is risky." Do interest rates just spike up? Does the market take care of that?
Greg, the bond market is going to light up when this happens. And what I mean by that, Greg, is we're going to see a spike in bond yields. Because why? I want people to understand this, and I'm more than certain that most of your readers get this concept, but here's where we're at. The entire financial system, Greg, is built upon the premise that it will function on confidence. It's a belief that the system will work. Once that confidence is shaken, party over, that's it. So we have confidence in the financial system now being shaken. We have the credibility of world central banks being put on the line by the central bank of central banks. So this isn't just you and me coming up with this stuff. These are the facts. So once the confidence in the system is lost, it's party over, Greg. And that's really what the issue is here with regard to Greece. There's a lot of pundits on the mainstream financial channels trying to blow this off. They're saying Greece is nothing. It's not a big deal. It's a tiny fraction of the European economy and an even smaller fraction of the global economy. Well, you know what? Whether that remains true or not, it doesn't matter. It's about confidence. And the confidence is being shaken, and you can see this in the spiking of bond yield. This has been happening for a while now. And I believe if there is a no vote here, there's going to be a big issue with regard to these bond yields. And it's going to put a lot of pressure on equities.
So you think the BIS, Bank of International Settlements, this came from them. This is not something that somebody analyzed. I mean, this actually came from them. Why the warning? Are they trying to tip everybody off that, take cover, this is going to blow, and we're not going to help you?
It does make sense from that perspective, absolutely. Look, I want to know this, and I already think we know the answer, is who's going to be held responsible for it, Greg? Unfortunately, no one. even in a worst case scenario, because again, the world relies on the financial system to function. Otherwise, we go back to hunter gatherers or back to a Mad Max scenario. So unfortunately, maybe this is a warning from the Bank of Internal Settlements here about what is going to happen. Look, we've been hearing warnings from Goldman Sachs, several of them over the past several months. Look out for what's coming. Look out for what's coming. And we're already seeing some of this here. And I think that they're trying to establish some type of a credibility in the event or when this all comes down. There's no way out, Greg. None. Period.
So they can't be like, oh, we didn't see this coming, because then, oh.
And we didn't warn you. Exactly. They're gonna
They
say.
have to say, yeah, we see this coming. I mean, that's what they're saying. They have to say, yeah, we see this coming because it's too big to miss. Is that what you're saying? That's because if they just, oh, surprise, then they'll say that people will say, well, what are we doing with you guys? You didn't see this coming.
Exactly. I wouldn't be surprised. Well, maybe I would actually, if more of these big banks like J.P. Morgan, Morgan Stanley start coming out with similar warnings that we've been hearing from Goldman Sachs. Again, they need to establish themselves. They say, hey, look, we saw this coming. We tried to warn you. And again, they need to establish their credibility as this thing unfolds. And it's cracking now, Greg. We have gone beyond the point of this debt bubble cracking. We have holes in it now. A while back, we did a video of one of these interviews, which was a title as the debt bubble is cracking or something along those lines. But we're actually seeing it burst now, Greg. And look, no matter what they do, they can't fix this issue. So even if there is a yes vote and they get another bailout, what does that mean? They're expanding the debt. They're blowing it up further, which just creates a greater issue down the line. Whether we deal with it now or whether we deal with it in 6 months or a year from now, it'll be much, much worse in 6 months or a year from now.
But you think the Greece thing and the Spain and Italy all wanting debt cuts, you think this is the unraveling, this is the process?
Of course it is. Absolutely. Can never be paid back, Greg. There's no doubt about it. What are they going to do? They're going to keep inflating a debt issue that they already can't pay back. All of these nations, the United States here, we are in debt beyond the point of beyond. So, look, we're all going to be facing this issue here. This is a global problem that has no solution. There's no way that you can continue to inflate the debt and the problem be fixed. Again, it's the mechanism of the system here, Greg, that's coming into question, and I believe we have to be close. Again, if we hear these comments out of the DIS, out of Goldman Sachs, and it's just so evident. Just look at the writing on the wall. It's everywhere. People need to start listening, and they need to start listening now.
Well, what about what's going on in China? I mean, they went into bear market territory in a week. I mean, they are 20-something%. I mean, they're just in free fall. What do you think's going on there?
I think that's a big tell as well. When you have a major a market player out there that is pretty much in free fall here. This is going to bleed off as well, Greg, and I believe it's all linked to the issue of debt. All of this just comes down to that. You want to boil everything down and make it simple for people to understand. That's it. Just look at the global debt problem, Greg. It's a Frankenstein. There's no other way to put it, and it's malignant, and it is going to wreak havoc on the world. Greater than if we had a nuclear exchange with regard to the loss of human life, because this is a resource problem, Greg. It's a resource issue, and people don't understand that. They think it's just a financial problem. It is not just a financial problem, and that's what people need to understand.
Well, if the bonds are no good, that means the money's no good, right?
Absolutely, Greg. And let's just talk about that just a little bit further. Once we start seeing these the creditors not being paid back here, what is that going to do? What people don't understand is all of this is intertwined. In other words, let's say, for example, let's just stick to Greece here. Greece doesn't want to pay or cannot pay their debt. Someone else is now responsible for that. It's called a credit default swap. Once that's triggered, again, that other entity that's responsible for paying that debt and can't do it, well, that's it. Boom. Then we start the cascade of events. Bang, 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 down the line. And as you have referred to many, many times, this debt is used as collateral, collateralized debt obligations. So this is it. This is the function and the foundation of the system now that is that's being threatened. So when that blows, and we're seeing it get close right now, where again, are they going to push this a little bit further? They're probably going to try, but it's not going to make a difference. We're gonna, again, we could be sitting here in a week from today when this interview comes out and looking at a much different world than we have right now.
Are you still think there's going to be a major event this fall? I don't see how they can put it past this fall. How they're just going to keep pretending? I mean, aren't we just pretending?
Absolutely, Greg. We are absolutely living in a world of make-believe and pretend that everything is going to be fine, that we can continue to feed the monster by adding more debt to it. Again, it can't happen. It's literally a scenario of which there is no solution at all, other than a complete reset of the system, which the free market is going to do on its own. It's trying to do that now, and it will win. There is no doubt in my mind whatsoever. If anyone out here is watching this, they have to understand that the market will win, because its only job is, again, to establish fair market value, and all of this has been twisted and distorted upside down, backwards and sideways, and mass capital misallocation across the spectrum because of this debt issue. It's incredible. It's actually beyond incredible, Greg. And this is going to snap back at one time, whether it's going to be now or next week or next month or even next year. It's going to happen. But the further they push this away, the worse that the issue is going to become. And I don't know what to say again, because the alternative to all this is too horrible to contemplate. Again, this is a resource problem, right? It's not just a financial one.
They'll have to reinvent money, aren't they? I mean, the bonds are money. I mean, we printed bonds, not just money. Aren't they going to have to reinvent some money, some kind of form of payment?
Yeah, they're going to have to do something here. What will it be? I would have to believe, at least, that there is already a new system in the works here. Whatever it's going to be, I have no idea. But something has to be in the works, because this system is dying. There's no doubt about it. Look at what's going on around the world and here in the United States, and it's only going to get worse until it gets better. And my greatest fear, Greg, and I'm sure it's yours, and a lot of the people that are listening to this here, is those people out there that have no idea of what is about to take place, and they are, in many ways, the zombies that are going to wake up when they realize that this system that they've been told is one real, because it's not real. It's all based upon a debt system which cannot continue on forever, and all of that they've worked for is just going to go up in smoke without any recourse, no way to recoup it. There's going to be a price to pay in the streets right here in the United States. We will see, again, those riots that we had in Baltimore explode in every state in our country and all over the world.
Gregory Mannarino, TradersChoice.net. Gregory Mannarino, thanks for coming on and giving us the news. It's not happy, but at least if you're forewarned, you're forearmed. Thank you, Gregory Mannarino, for joining us today on USA Watchdog.
Great to be here, Greg. Thank you.